All right, let's jump into it. Where are we at? It is 12:49 on the 28th of September. So coming into end of the month, end of the quarter as well. I think it's Wednesday is the new month starting there. So could see sort of a little bit of sort of USD balancing and that sort of coming into the end of the month, but we'll sort of see how that goes when we jump onto the charts. Firstly, just sort of go through that last little bit of data that we had sort of coming out during the week. So we had obviously on that Thursday, I already covered this there, but that's some very strong US dollar data, and we saw um, basically DXY sort of take off on that sort of move there. And of course, the one that they were really kind of looking at past that sort of block of data was the PCE on sort of Friday night. And look, expectations were sort of that it was going to come in 0.2%. It did come in that, but on top of that, you actually had last month's revised down. So as you can see, they revised from 0.3% down to 0.2%. So that in its sense is sort of like, so Fed proclaim that sort of the PCE is their kind of preferred method of inflation data. And of course, it's a big sort of tussle at the moment. Like we've been sort of so focused on jobs for, last couple of months and that, particularly since, pretty much since Jackson Hole, that's been at the forefront. After FOMC, we've got a bit more of a hold your horses. Look, inflation is still potentially sort of going to be coming through. We're going to see some numbers there. So when we get this data that comes out here, which kind of shows no real increase and no sort of like pressure upwardly on inflation in this regard, you see the market go, "Oh, okay, hold on, wait. It's just jostling back and forth and sort of thinking, okay, maybe not so much. Other bits of data just coming out sort of into the end of the week here as well. We had consumer sentiment ticked down just slightly, was expected to move up just a little bit there, and then sort of inflation expectations also ticked down only slightly, but it did come down. And of course, we had Bowman speaking there, and I covered Bowman the other day, and she is just absolutely throwing water on anything that could be US dollar strength related, and very much sort of like, hey, we need to keep sort of pushing this idea that jobs is still the main thing. Inflation's going to be a one-time issue, and we're not going to have to sort of worry about that so much. And of course, the resulting factor of how the Fed would handle that would be from the idea that they would sort of be lowering rates to address the job situation, and obviously not needing to hold them where they are, and address the inflation. And look, I mean, to her credit, in this small little pocket of data here, that is basically in line with what it was. And so with that, we kind of sort of saw the US dollar sort of sell off ever so slightly. It was actually probably the strongest week that it's done for a while, which obviously I'll get to with charts in a moment. But that is sort of why you didn't get any sort of further gains into the end of the week. We saw sort of gold tick up a little bit off this as well. But of course, NFP coming up this week, first Friday of the month, that's going to be the big mover kind of thing. So very much forward looking with the bit of data that we got coming there. So have a quick squiz through what we do have sort of coming up this week in terms of data. So we jump on here. So as you can see, yeah, new month was it on the Wednesday? Yep, on the Wednesday there. So starting off Monday, daylight savings over in New Zealand, so it must be sort of coming through to Australia again soon as well. Look, Monday fairly quiet. We got Walla. Walla's one of the dissenters, so generally sort of like same with when Bowman talks, Walla talks, the market kind of goes okay, and sort of leans on the more sort of like US dollar weak side. So it's just something to keep in mind. Typically, look, up until the last couple of months, I wouldn't have really highlighted many of these speakers, but at the moment, particularly Waller and Bowman, when they talk, the market loves to sort of sell the US dollar off there. But short of that, not really much data on the Monday that's sort of really sort of taking too much interest. Moving forward, Tuesday, I've got a few more sort of speakers in the middle of the night kind of thing. We've got here building approvals. Excuse me. Nothing too exciting here, but it is moving in a positive direction. Just for point, this isn't going to be market moving sort of data. It's just something interesting to sort of see. As you can see, this sort of thing really sort of flies around a lot. But ticking back into the positive side of things, maybe slight impact of it, but not really. I don't think it's really something to sort of hang your hat on. PMI data out of China, that's probably something that could sort of see a little bit of a move with the yuan. But apart from that, yeah, it's not really a great deal happening till we get to, oh, it's on Tuesday. Yeah, the rate decision from the RBA, and we're looking to hold here. Now, I think this is pretty much a guarantee that we are going to hold. Look, I don't like to sort of say anything's ever 100%. They're in a sort of cutting cycle, but I think the fact that we had CPI spike up two prints ago and then sort of basically stay persistently high just last week, I think that's pretty much a sort of guarantee that we're going to get at least a sort of bit of a pause. So this 3.6% sort of no movement kind of thing with the RBA is pretty much what the market would be. Obviously, it's what they're expecting, but I don't think it's going to be largely impactful with that. Aussie has been sort of settling off. Actually, almost sort of came off about 200 points from its high, so it got over 67 cents. But of course, as I keep saying, sort of with these things, it doesn't really matter with Aussie data in the sense that it's not going to drive the market. It's always going to be the tail being wagged by what's happening of the US dollar. And so even if we saw that tick up in CPI, 2 months back to back, you would have expected Aussie to appreciate on that. But again, it's if the if the market starts to buy US dollar across the board, it's not going to sort of be like, hey, you know what, Aussie's such a great thing, and we're going to buy that even more. It'll just sort of either slow down or accelerate the move that would already be happening with that US dollar across the board. And as we saw, they were buying the US dollar. Well, as you can see, Aussie obviously sort of came down there a little bit as well, but probably didn't come down as far as it would have had the CPI been in lower. So move along. We got sort of anyway. Expectation with that is a hold, might add some sort of strength to Aussie dollar. We'll see what happens with the US dollar sort of come the early sort of start of the week and that press conference afterwards. That's where we might sort of actually see a little bit more sort of up and down. But I don't expect much to be happening around this actual rate decision. Press conference coming along. Rest of the day looks pretty quiet. Nothing sort of jumping out. Nothing sort of super as note. You got Lagarde sort of speaking later on for what it's worth. And then we get into the nitty gritty. So these are the ones that we're sort of really looking at again because, like last month, we had just 3 hits of bad jobs data. Now we've got to see, is this still as bad? So JOLTS is the first one kicking off Wednesday morning or Tuesday night. 7.15 million, down from 7.18. So obviously job openings, and it's the same sort of thing. I mean, when you're advertising more, you're doing it because you're sort of a little bit more confident about what's happening, and the same is true in the other direction, and it's obviously a little bit of a sign of weakness. If this number comes in a shock above, we're going to see US dollar catch a bid. If it comes in line or below, probably a sell-off kind of thing. It's not really going to be too much of a shocker sort of through that there. But that's the first of the sort of jobs data we can expect for the week. Moving on, where have we got here? Again, look, not a great deal. Commodity prices through here, not a great deal. We've got CPI happening over in Europe on Wednesday. Where are we going? 2%. Where's the revised down, and looking to tick up there a little bit there as well. Look, it's one of these sort of things. If we do see these come in a little bit higher, this is an acceptable level. 2% is the sort of target that they kind of want to see these things sort of as a healthy growth of inflation. But it's very much in that ballpark. But again, higher number here is going to be strength for the euro, and then obviously sort of inverse as well. Should that come in a little bit weaker. ADP is the next one that we're looking at, Wednesday night, 10:15. Look, 54,000 down to 53,000, quite low numbers. But if the thing with the jobs at the moment really sort of seems to be the first step, obviously, is to sort of stop the decline and then stabilize, and then they can start to look at some sort of growth with it all. So I think anything that sort of comes in as a positive is going to be sort of met with, okay, a little bit of US dollar, maybe not necessarily say strength, but I would say it would be more on that side of things opposed to sort of continually selling off. As you can see, we've had a couple of low prints previously with it all, but if we could come in and sort of stabilize this thing, I think that'll be seen as a positive. If it comes in much lower, well, okay, jobs is still the persistent issue, and obviously the Fed will address that with potentially sort of speeding up the cutting kind of cycle, which will be weak for US dollar in that sort of sense. So that's the second one that we're kind of looking at in terms of the big three. Just after that, we got ISM. So it's actually going to be a very busy week in terms of data. These are the ones with the 50 benchmark, and ISM manufacturing PMIs. So it's looking to tick up there a little bit as well. So with the US dollar at the moment, obviously the jobs is a big thing, inflation is a big thing, but you've also got to look at actually how the sort of economic data is actually sort of basically coming out, because we saw, as I said, that large block of strong US data, GDP beating expectations by quite a bit. Actually, I think it was the strongest in 2 years and the second strongest in the last 3 years print that they'd had with the GDP. And the idea with this is that if you're doing it with low numbers, like low employment, and you're still producing, basically better than expected data and economic output, that in theory, if the jobs then sort of picking up and we're adding more to the economy, that is obviously going to sort of, in theory, you'd expect that to accelerate those numbers there as well. And that's the third sort of piece of the puzzle that you're kind of sort of putting in as to sort of how the Fed may be sort of looking at these things. I think still sort of definitely, obviously, the jobs and inflation are the big sort of ones, because I mean that's what they say, that's their dual mandate. But obviously at the same time, you got to put the economic data almost alongside the jobs, because jobs may be going down, but if your economic output is still holding and actually doing better, maybe it's not as bad. But it's just sort of like when you've got lower jobs, lower output, that's when you're basically sort of raising the flag on recession. So that's sort of just another part of the fun of sort of balancing all these bits of data and that at the moment. Um, Tick along. Where we got Thursday? Not a great deal. Nothing of interest here. We've got Aussie sort of trade balance over here. Okay, it's looking to slow down here a little bit. Household spending looking to slow down here a little bit as well. These things aren't particularly sort of, look, they're not going to be massive market movers, but it's pieces of the puzzle you can sort of put in here. If these numbers are slowing down, household spending, they're not spending. Why you're not spending? Because you're not so confident of your outlook. That's the idea. The trade balance obviously coming down. It's not a overly strong sign of things, sort of a bit more of a macro level. But it's something to sort of keep an eye on. I don't think it's going to be these kind of sort of bits of data. If you do get any sort of reaction, it may be like a little knee-jerk reaction, but it's not going to be like, oh, hold on, wait here, now we need to recalibrate and sort of change the landscape based on these kind of bits of data. But it's just something to keep an eye on. Moving through the rest of Thursday, we've got unemployment claims. Now, this one's 229, so expecting to sort of tick back up here. So maybe this could be like, because it was quite a low print, 218 last week. As you can see, it sort of had that spike up to 263, came down, and then sort of came back down here again. So it seems to be around that sort of 20s, 30s is about the sort of the average of where you kind of sort of see the prices sort of sit. Well, at least for the last couple of months. If this does sort of tick back up here, I don't think it's going to be a shock until it gets back up to 40 plus. So I think it's probably back up into sort of maybe an acceptable band. You accept that this maybe 218 was just a bit of a sort of a, I don't know if these things really work as an overshoot, but sort of could be just sort of like hey, we came out the top side of the band, now it's at the bottom side of the band, and just it's an acceptable thing that it's going to bounce back up and down there as well. But certainly this one is another. It's not as big as the other three, the JOLTS, ADP, and NFP, but this one comes out weekly, the unemployment claims, and again, it's just one of the parts of the puzzle that you put in there in regards to sort of how the jobs situation is looking basically through the eyes of the Fed. And then into Friday, we've got bank holiday in China. Ueda is speaking at some stage. Again, not going to be a massive mover. German bank holiday. And then, of course, sort of coming into the end of the week, NFP is going to be the big one. Now, this number is incredibly low. So it's expecting to sort of tick up here. Excuse me, expecting to tick up here. Unemployment looking to sort of stay at 4.3%. 22,000 is incredibly low on a population of 350 million. And of course, sort of NFP, and so ADP is your private sector, and ADP is your private sector, and then NFP is the private plus the public, I guess, sector, sort of together, sort of combination of the two. And people have sort of spoken about the idea that this ADP could, well, I mean, in theory, part of ADP makes up NFP, but it doesn't really seem to sort of ring true, at least not for quite a while now, that you can actually use ADP to get an idea and predict what's going to happen with NFP. I mean, in theory, it's a component of it. It's make it up, but it's not really something that you see as a strong correlation between the two. But again, this is what you're starting to look for. So if you can see, if you look at the previous numbers here, 177, 139, 147, 73, 22. 22 is incredibly low. And this is why they're saying, hey, look, I mean, if you look at this, let's put it on a graph, you can see, well, let's get it closer so we can actually see where we're at. You can see the trend. You get a couple of outlier big months, but geez, that was November 24 was like when they had the hurricanes or something like this. But as you can see, you can very much tell that that trend is moving down, 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 down. So, you want to see this thing stabilize. 55 will put you about here, but you want to see this thing stabilize and then start to push back up on it, back up towards that sort of 200 kind of level. That seems to be a fairly healthy sort of like, you get a couple of stronger ones here, but it comes back to about the average through there. You could say, you could put a line through the middle there and say that's where, you'd want to see it. And you can see that, since May, it's just really just fallen off a cliff. It's just come back down here. So goal with this is obviously to stabilize this and then to start to push back up towards 200. And that's when you're going to start to see, basically the narrative change, and people sort of start to sort of say, hey, look, jobs aren't so much of an issue. It's on the incline, and maybe inflation is the one that we really need to sort of keep an eye on and not sort of blow out. So, and then of course after that we've got ISM. ISM sort of coming in at 12 o'clock on Friday night. So going to be very, very busy week in terms of data. So Monday will be a bit cruisy, maybe. We'll see how the sort of the market sort of reacts to the end of the week data that we had. Maybe a little bit of a flow on there, but past that, it's going to be quite a busy week. All right, so jump onto the charts. And look, we'll start off with DXY. And as you can see, if we put on this on a weekly chart here, this was the one that we're kind of looking at here. And as you can see, big negative divergence sort of coming off these lows here. We have seen a little bit of a sort of flow-on effect through here. Did sort of come to stop where we had that zone marked out. That was a daily zone. As you can see, support, support, resistance, resistance. So, it played its part as it should. Hit that first target. Interesting to see where we go to from here now. Obviously, like generally with these things, you could probably expect a little bit of a flow on effect, sort of, maybe a little bit of a weakness in the sort of in the early part of the week. But even if this were to sort of turn around, I'd expect it at least to sort of come up and confirm one more time that the sellers are not going to allow it past this level. Meaning that if we do get a little bit of a weakness into the open, I would expect probably maybe a bit of a later, like, maybe through Euro into US session, at least a little test up around this area here to do this sort of body fill. And then if they reject it from there a second time, then we can say, okay, hold on, wait, maybe it's going to be coming back down a little bit lower. But the thing is, you've had that negative divergence, you've had a nice sort of big push off the lows. I mean, like, this is the strongest move. We'll probably, actually, no, I suppose this was a bigger move there, wasn't it? But, it's moves up nearly 3% from those, or 2.5%, sorry, from the lows. So you got to respect that it is okay. Market is going, okay, let's hold this thing here. But this is going to be a big week for it all, because if NFP comes in stronger, as I said, that opens the door to sort of say, hey, inflation's more the issue. Inflation, to deal with that, is to potentially hold the rates for longer, and that's going to see a little bit more of an appreciation with US dollar to the top side. If we do get weak jobs numbers, which is obviously you need to consider both sides of the coin with this, that's most likely going to keep us back down into these lower levels over here, and we could be seeing a move back down 97. I mean, pick where you sort of think it may come to at the time, but first targets would be 97.74, underneath that 97.36, underneath that, well, you're probably going to go a lot lower, I would say, with that. But, of course, we've got to wait for this sort of sound like the Fed or the central banks here. We're going to have to wait to see what the data says. And that's really what all it comes down to here. You're seeing the market sort of start to sort of position the idea that jobs aren't the only factor. Inflation may be a bit, and that's why you've seen a bit of a peeling off of this position here. But you need them to sort of actually sort of turn around and say, hey, look, you know what? Inflation is the issue. And that's when we're going to see it start to sort of come further up to the top side over here. We can start to look at some of these other levels up around 99 to 100. Actual actionable sort of stuff, as you can see, we did hit that on the lower time frame. You can see this is where we sort of moved up coming into that bit of data. Data came out. Excuse me. Where was it? So 10:30. So this is the candle here. So it's kind of already sort of pairing off a little bit, sort of coming into it. But as you can see, let's just drag this for now for what it's worth. That data obviously wasn't particularly strong in terms of the inflation idea of things, and that's why we saw a US dollar sell off. And then, on top of that, I didn't see the comments of Bowman, but you can pretty much, she speaks a couple of times a week, and it's generally the same kind of thing. Obviously, the market just completely sold down from that point there. A little bit of a little push just into the last hour of the week, but nothing too spectacular there. So I wouldn't be surprised if we do get a little bit of a continuation, this move coming back down over here. Look, bottom side could be around that sort of 97.90, that breakout level that we saw on Thursday when we saw all that data come up through there. But I would expect at least another attempt up over here before you would just say, okay, boom, and commit to the downside there, because the data wasn't sort of shocking. It wasn't great, but it wasn't like completely shocking. It was in line with expectations. And of course, we did have a bunch of sort of strong data prior to that. So it's just about how the market's going to sort of position itself. Look, with the NFP expected to come in a little bit stronger, you would probably expect them to sort of go, hold on, wait, let's not completely sell this off till we see that super weak data. And if they get the super weak data, that'll be the time to sort of trigger it to the downside. So we'll see how we go, but in a short term, obviously sort of just the lows that we sort of put in over here, that'll be an interesting sort of level to see if we can hold it. But I'll put it back actually over to this wick just over here, just give it a little bit of breathing space in that. But I would say sort of probably a move underneath here, probably look to see what happens at a retest of this 97.90 level, which was that breakout that we had on Thursday. But all in all, I'd expect, even with a little bit of weakness early into it, to possibly sort of come up and test this 98.50 level, sort of before we see too much happening. All right, on to Aussie. So Aussie, as I said, it's got absolutely crunched from its 97 high, and I covered this at the time that they sort of like turnaround sort of setups where you've got this dribble down, then a big candle up the top over here, and then fast rejection all in one candle. This being a 4-hour candle, of course, does lead to that sort of sell down here. And this is what I'm saying, even sort of despite having slightly stronger, well, slightly higher or persistent CPI readings, it's obviously still had a pretty bad kind of week for itself here. So let's actually have a look at this weekly. So this was a big one. Actually, where was the other? I think this is the one we put on. Yeah, so this is the negative divergence that we sort of called last week. And as you can see, it's very much starting to play out here now. Now, look, it's not sort of guaranteed, obviously. Nothing's guaranteed with this sort of stuff. But certainly if you come through this little channel over here, I think we could start to finally see some targets back down around that 63s, 63.50 levels. That's the kind of area that I'd be kind of interested in. It's not to sort of say, I mean, look, RBA is looking most likely to hold this week. That'll be slightly positive for the Aussie. But it really all comes down to what they do with the US dollar. If they sell the US dollar off, well, again, Aussie's just going to be part of that, and on with the channel, on with the way it goes. But I wouldn't be surprised if we do see at least a couple of tests down around the 65.20s level before it does sort of regain, if it is going to regain. But certainly negative divergence on a weekly time frame. You saw the flow on move with this. Certainly if this puts in another negative week, we could be definitely sort of looking to sort of confirm some sort of lower levels there. And as I said, this will come in at the same time. You'll see the yuan strengthen it up, weaken. And you'll also see the, obviously DXY will sort of be running up there a little bit as well. In terms of that sum is actionable with it all, we didn't quite get to that sort of bear flag completion. I thought we may have had one push a little bit lower. We got down to 65.20, but this is what I sort of say constantly with these things. The 20s, 90s, and 60s always seem to be a fairly decent level that you'll get a reaction from with the market. As you can see, 90s, they tried to give it a bit of an effort. And once that 80 went, boom, moved down here. So, look, I still think that most likely you're going to sort of, even if we are to sort of move back up, you probably are sort of looking around at least this test of 64.90s. But that'll be the big one there. And I think if you break 64.90, that takes you outside that channel. Look, it's been outside the channel before. And obviously there's some like lower level sort of support levels sort of through there. But under 64.90, I think is really going to be a bit of a confirmation because it was all, got negative divergence on the weekly. You're breaking that channel. Most likely it's going to be the time that obviously US dollar would be running. I think that could be opening this up to a move down to say 63.50 at least over the coming sort of week or two. In terms of sort of what we could see earlier in the week, obviously, look, it did start to bounce up a little bit as we saw that US dollar sell off into the close. So again, I wouldn't be surprised if it stays persistently a little bit around this kind of level early, but I would certainly want to see at least another test of 65.20 before I'd be confirming this as being a bottom. I would say there's most likely, yeah, that's where you're going. If you break the 65.20, then you're looking down 64.90s. That's where I'll be booking some short profit on that one. And look, if most likely you're going to get a reaction from here, as I said, with the 90s, as always seems to be. So you look for the bounce, look for the sort of any sort of resistance then to sort of come in, possibly back underneath these 65.20 levels. As you can see here, it sort of came down into the well, actually overshot this, came down to 70s or so, but yeah, around this kind of 90s level, moved up, tested the underside here in the 20s, and then moved down. You could probably expect a similar kind of move through here. If you come down into 64.90s, look for sort of some rejection around that sort of 65.20, 65.30, and then look to see a second effort to go down underneath that sort of 64.90. But with RBA looking to hold, and also the big question mark over all the sort of jobs data, I don't expect that to be breaking probably till we get NFP, and only if we get NFP with quite a strong beat. That's kind of how I'd be sort of looking to play Aussie through this period. We flip on to gold. So gold very much was the sort of the beneficiary, obviously, as you can see, sort of that weaker US dollar into the end of the week, and it did sort of start to shoot out. It was quite interesting actually because they sold it down quite hard into the close here. I mean, it's not anything too major. It really is kind of just coming at a back test of this kind of 30s. So you can see this little resistance, bang, breaks through here, 11:30, 10:30. So it was around this time over here. So 10:30 is when they had the data, and it didn't react straight away, but it came up afterwards. Do you have any other data coming out then? That's last week. Oh, sorry, that's this week. Yeah, so 10:30, then 11 o'clock we had a Fed speaker, and then 12 o'clock we had the. So where we at? So that was the data there. A little bit of a spike, but wasn't enough to get it through. 11 o'clock we had that speaker, and then 12 o'clock is when you had the what's called was it consumer sentiment? Yeah, consumer sentiment coming in a little bit lower, and rate, I think probably more, even though this is marked down as a lower impact kind of thing, I think the inflation expectations is probably what sort of was more impactful with that. But obviously the combination of all that kind of stuff with the Fed speaker, inflation expectations down, the just got 2 second memory at the moment. Consumer sentiment that down there as well. Combination of all these things, obviously, sort of saw it catch a bid to the top side. But this sort of thing. I mean, look, if you look at this on a weekly, it's closed very much up the high top end of all this sort of stuff. Give it this thing, very much up in the sort of top end of it all. Like, that's not a sort of weekly candle. I mean, the body's actually accelerating from what we've seen since that big breakout. So it's still a very bullish mode kind of thing here. But as you can see, similar to sort of kind of how we had with that Aussie, come back down, big spike up here, sellers moved in. It really does still just put the focus on whether we're going to see some sort of cooling along the way. This is on the daily here. RSI is it's turned, but it's very flat. And this is the thing, obviously, sort of coming up here, you'd want to see this thing sort of push up here. But should we see get a bit of a positive week, if we sort of push back up into this sort of like, 37, so take out that wick high there, the 37.80 level, I mean, obviously that's confirmation, and bang, bang, you're going up here, you're probably going into the 38s. That's for the top side move. Downside move, I would say, is definitely underneath this 37.27, that kind of area here. If you do happen to get some sort of US dollar strength through this week, that would be taking you sort of through this trend line. You'd get this sort of nice little second effort rejection, and then obviously sort of a failed continuation move will lead to a move back down to the bottom side here. So there's no point sort of necessarily trying to be the first one into the trade with it all, but just considering both sides of the coin. And even if this does sort of pull back, it doesn't mean, okay, game over for gold or anything. I mean, look, it's what is it, $30 or something? What did we hit? Oh no, yeah, so $40 off the $30 off the highs. So it's still incredibly bullish, but things that are incredibly bullish can still have corrective motions as well. And if we start to see US dollars sort of running and strengthen up, and we see inflation be the sort of main topic, that's the thing with gold. If jobs is the sort of main thing, well, we know that they're going to cut, makes US dollar not attractive, US dollar not attractive, you're going to see gold appreciate further. But if they sort of start to shift the focus onto the inflation, that's when we're going to start to see US dollar strengthen up a little bit. And that's probably when we'll see a little bit of a cooling in gold. And we can start to look at sort of, okay, where may it sort of be coming back down to? I mean, the previous highs, so 3,500, that's probably a decent-ish kind of level. It's quite a large pullback, as you can see from here, that's 61%, but these things can happen. So, first things first, we'll see if we can get down underneath 37, 37.20, this kind of area here. If it does, then okay, we're looking at sort of 36.40, most likely, and then sort of like so on and so on. We work on those levels as we get to them, but realistically, at the moment, it's just a whisker off the high. So, if it gets a sort of bit of a push early, if we see some sort of weak job numbers, that'd probably be the time that we're going to see this thing sort of accelerate and move up into the 3800s or so. Silver, all you can say is this thing's just a beast. It went through that sort of 261 retracement of the April sell downs, and it's just accelerating. That thing is just on fire. So I haven't traded this actually for quite a while, since back around this point here. I sort of caught the short, stopped out a couple of times, and then sort of left it from 33s, and now it's at 46. That's just unbelievable. All the people that sort of trade silver, I mean, they've dealt with years and years of just nothingness, kind of disappointment. So I think they're all sort of clapping their hands now and sort of, you see these analysis of these people and they're sort of saying, oh, it's just the repricing. It's what it's always been due. And look, it is. It's on an absolute rip at the moment. But it's just going up to sort of find where is it at a level where the sellers are going to be happy to sort of push back in. These things don't continue forever. But certainly, it's an incredible move. Move along, we've got copper. Copper obviously had that little bit of a push up during the week, but sellers moved in pretty much on point where we'd expect them to be, and have sort of pushed it back down. It's in a bit of a backtest mode at the moment. It's trying to hold this other zone. It didn't even really think about this as it went through it. Obviously trying to hold it as a bit of a sort of pushback. I wouldn't be surprised if this dribbles back down here a little bit. Look, you've got some headlines and you've got some things that sound positive, but if these things are going to run, this is the time for them to catch on. You've got these people that bought this stuff and tried to catch that pullback. They've been holding these positions for 2 months or so, and they're just like, okay, great, I'm out, bang. You're going to have to deal with that a lot on the way back up. So I'd say very much this thing's going to be very choppy, grindy, even if it is to keep appreciating up to the top side there. But I wouldn't be surprised if we see this sort of dribble back down here a little bit. I'd be interested to sort of see what happens if we get back down to this level, because obviously, if people try to buy this pullback here, they got out, just chopped through it this time. Maybe they'll start to go, okay, maybe it's actually worth having another shot of it here. You can reset your move and sort of start here. So I think the level for it to hold is 4.69. If it doesn't hold that, okay, you look down over here, but I wouldn't be surprised if a little bit of a sell down and at least an attempt from the buyers to hold it at that zone there. And finally, just the yuan. And yuan is one that I've sort of been touting for a while here. We had the negative divergence on the daily time frame, which is obviously a fairly decent sort of time frame to be seeing it on. It did come up and sort of tested this zone here. If we get onto a lower time frame, you can see it. This is pretty much exactly where we had the mark, and we said, look, this is the level that it needs to beat. It's pushed right up into it. Very similar to DXY at the moment in the sense that, okay, yeah, the data wasn't great into the end of the week, but it wasn't shocking. And same with how you're looking at gold, obviously gold on a much larger sort of time frame. But if you consider this as its move from the lows here, this is still just a whisker off the highs. So it may not have had the green light to go further at this point, but certainly it wasn't met with the same kind of selling that we've seen in the past. So in the past, and that obviously, letdowns. So market the data isn't sort of what the market was maybe expecting, even though it was expected. It was just revised down. But the market didn't go, okay, that's cool. Let's sell, 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 sell. They just didn't accelerate through, if that makes sense. So it's just consolidating underneath that resistance zone above 715. I think that opens it up. We start to look at 717 after that, above 717, so on and so on. The major sort of big one that we're kind of looking at is 723. Above 723, I think that's where you're really going to see potential for US dollar buying across the board. This would come in line with Aussie sort of getting sort of coming back down a little bit. It would come in line with gold cooling off a little bit. But of course, you've got to consider both sides of the coin here. And if they do reject this level and we start to see this sort of start to sell down again, this is the weekly time frame. So it held the first time. Second effort is where it really counts. It's a question now is, do they do this sort of structurally and do a second test down here and then move forward? Or does this turn into a short squeeze and we really see minimal sort of pullbacks? That's where you can tell it's a bit of a squeeze, where the pullbacks are like this size here, where there's just there's no position for people to get on the trade if they want to get long, unless they're just buying it. Like there's no deep correction. Okay, now I'll buy it. You just need to almost just jump on board with it. And you start to see that sort of these things just continually grind up with very shallow pullbacks. That's when we can say, okay, look, it's a bit of a squeeze. But look, we do have a little bit of this wedge that was forming. It was coming off the weekly support zones. We had a negative divergence on the daily, and look, it's reacted as it should. You just need to get that confirmation to get past those levels, which we call the confirmation lines. Like this is the move, and it's moved exactly as it should. But it doesn't mean that these moves carry on forever, and that's why we have the confirmation line there. And above 715 will be the confirmation line there. And this will probably be, as I said, around the same time you see Aussie testing down into those 64-cent zones to potentially break its support levels and then sort of see deeper corrections on that there as well. All right, that's it from me.